As I said, in bookkeeping, we have the accounting process. The word accounting means recording and summarizing, classifying all the business transactions. So before you record the transactions, you must understand which class of account it is supposed to be recorded. Therefore, we have the books of original entry where we record the first transactions. Those are the first books where we record all the business transactions every day, daily transactions. We record them in the books of original entry. So we get the totals from the books of original entry, that's the journal. Those totals, we write them in the ledger. Now that is where the accounting process starts. The ledger. The ledger is a book of account where transactions which are of monetary terms, like financial transactions, are recorded. At the end of the period, after recording in the ledger, you balance off the ledger. Balancing off, we say, is inserting the difference in the smaller side or the lesser side of the account. We said we have two sides of the ledger. We have debit and credit. So you check the totals of both debit and credit. You subtract the lesser side from the bigger side. Then the difference between the bigger and the lesser side, you insert in the lesser side. That is now the ledger. Then you balance, or balancing off, as I've said. The balancing figure, we say we call it balance carried down. We call it balance carried down. This is the closing figure, and we call it closing figure or the balancing figure. You insert it in the lesser side. Okay, those balances from the ledger, we take them to the trial balance. If the balancing figure was on the debit side, the next day you take it the opposite side. The side which you have written, the balance brought down, that's the opening figure. Balance brought down, opening figure, is what we take in the trial balance. If it was on the debit side, you write on the debit side of the trial balance. If it was on the credit side, you write on the credit side of the trial balance. Then, from the ledger, we have transferred the figures or the balancing figures to the trial balance. Now the trial balance is going to give us a list of all items and their figures from the ledger. So a trial balance is a list of debit and credit balances extracted from the ledger at a particular accounting period. So this list of these balances in the trial balance, they are going to assist us to prepare the three financial statements. The first one is the trading account, followed by the profit and loss account, and then the balance sheet. So I would like us to start with the trial balance. I'm going to use an example so that you can understand how you prepare a trial balance. Yeah, we are given balances of Tenor Enterprises as at 30th September 2014. I've given you the format of a trial balance, but I'm going to give you an example so that you can remember the format. So a trial balance, we say it has the title, So for example, here we are given the business name as Gender Enterprises. Gender Enterprises. Trial balance. For the trial balance, we use the term as at. As at 30th September 2014. Now that is the heading. Then we say a trial balance has two sides. So the two sides, we are not going to use them as debit and credit, but we are going to call them the columns. So the first column, this is for credit transactions. Then you record the currency. Here is the debit. Then we have the currency, which is Kenya shillings, because we are in Kenya. Then here we write the details. That's how the trial balance looks like. Now let us use the figures which are given here. We have equipment, because a trial balance is just a list of items. We can list them, all of them. We have inventory. We have accounts payable. We have repairs. We have bank loan. We have sales. We have purchases. We have bank overdraft. Accounts receivable. And we have capital. Now let us follow the rule of double entry so that we can know where to record this transaction. Equipment is an asset. Assets are debited. So on the debit side, we record the figure for equipment, 654,654,000. Then inventory, in the trial balance we use the opening stock. So inventory is the stock. Stock is an asset, so we debit 28,000. Accounts payable are the creditors. These are creditors. So if they are creditors, they are liabilities. Liabilities are credited. 15,000. Repair is an expense. Expenses always are debited. So we write repairs on the debit side. 25,000. Make sure you align your figures. Then bank loan is a liability. Record on the credit side, 100,000. Sales as a rule is supposed to be credited. We record on the credit side. $920,000. We have purchases we debit 530,000. Bank overdraft is a liability, we credit. Bank overdraft we credit. 44,000. You have accounts receivable, these are debtors. Accounts receivable are debtors. So debtors are assets, we debit 22,000. Then we have capital, which is a special liability, we credit 180,000. Now let us get the totals. All sides must be equal. So we get the total for the debit side and the total for the credit side. You can use your calculator. $1,259,000 debit side, credit side. They are the same, 1,259,000. So as you can see, the totals are the same. Both debt and the credit, they are equal, meaning there's no error. That's all about the trial balance. So from this question, you are supposed to get 12 marks. 12 marks. So make sure you understand where the item is classified. We learned about classification of accounts. So all assets, they are debited. All the liabilities credited. Capital credited. Sales credited. Purchases credited. Purchases we debit and the capital we credit. Sales we credit. All revenues we credit. That's the rule of double entry.